Good evening, everybody. Thanks very much for joining us again. What I want to do this week is to perhaps take a look at something that is quite basic within the subject of technical analysis, and that's price action. But it's something that I think is very important when we come to analyzing any particular market in any particular strategy. Now, I'm going to look at FX markets in particular tonight, but again, any of this can be applied to any market that we wish to look at. So why is price action so important to monitor? Well, basically, price is the basis of everything that we look at within technical analysis. For instance, all technical indicators are based on price levels. So a closing price, for instance, a moving average, MACD, whatever you want to look at, is based on that particular price action. And also, everything that we know that the market knows about the latest information is discounted in price. So it's very important for us to keep a close watch on price action. Now, it also gives us a great feel for sentiment. Now, it's often very difficult to actually gauge what sentiment is within a market. But when we look at price and use things like candlestick charts, we can gauge the sentiment that's developing within the market and how that's likely to relate within future price action. So, for instance, a very basic definition of an uptrend is higher highs and higher lows. If we consistently see prices posting higher highs, then we're trading within a much more positive sentiment, a bullish trend, and then reactions find buyers at a higher level each time, so we post higher lows. In the same way, with a downtrend, lower highs and lower lows is a negative form of sentiment, and it reflects that sellers are active within the market at a lower level each time, maintaining what is a bearish trend and the risk for further weakness within price activity. And when we look at candlestick charts, for instance, the important piece of information that it gives us is the relationship between the open and close and how far we close from the opening price, be it to the up or to the downside. Now, the further we close away from the opening price, the more significant that day is in terms of sentiment, because effectively, if we're trading and we close significantly higher than the opening price, that first reference of value, the first opportunity to trade at the open, in relation to the last opportunity to trade, or the closing price, gives us a feel for whether or not buyers or sellers have been dominant during that day's price activity. So it's very important to keep a gauge on the sentiment by using candlesticks. And also rejections of highs and lows, or if we look at it within candlestick analysis, lengthening upper or lower shadows can often reflect turning points within activity. Because basically what this is saying is if the market is rallying, hits a level, and then suddenly sees increasing selling pressure, and the lengthening upper shadow reflects the strength of supply of resistance at higher levels and the potential of a turning point and reaction to the recent upside move. And then also candlestick patterns can give us what's called a doji pattern, which reflects indecision. Now, this is where the market opens and closes at or very close to the opening price. So we almost have a horizontal line reflecting the open and close, which highlights balance. Or, if we want to look at it another way in terms of sentiment, trader indecision and uncertainty as to whether or not the current price move can continue without some sort of reaction to the ongoing trend. So let's take a look at current examples within the FX markets and look at euro dollar on a daily basis and how we could have applied candlesticks within that analysis and actually what it's telling us now in terms of price action. Well, interestingly, when we look at the candles that we've highlighted within these green circles, we can see that each session saw a significant close above the opening price for that particular day. So the real body of the candle was positive because we closed higher than the opening price, and by some way, where if we compare it to the preceding candles, they weren't as large. And we can gauge that this sudden upward movement to see a close above the opening price by some way, in positive sentiment beginning to emerge, and the risk that these correction trades that we'd previously seen are ending, and that we can look for further positive follow-through, maybe even new highs, an extension of the ongoing positive themes that have been in place since early October. If we then look at the most recent high in early February, we can see that we started to see rejections from new recovery highs, a close some way below the opening price, followed by a further session where we saw a bearish candle developing, closing some way below the opening price, and rejecting from the day's highs once more. So in each of these circles, we're starting to see some important sentiment changes that are giving us clues as to where the next directional risks are beginning to develop. Now, when we look at consolidation areas, and we refer back to the doji patterns that we were talking about earlier, when we look at the circles that we've highlighted here, the turning points were reflected by very small open-close relationships, or open and close at the same level for that particular day. So as we approach the lower limits of the range that we're starting to establish within this activity, we started to see doji patterns highlighting uncertainty and the potential of a reaction to what has previously been a further price weakness. And this most recent doji pattern after a strong rally resulted in a sharp downside move. Now, we could have viewed this as a negative candle in terms of highlighting fresh negative sentiment. However, we failed to close below the previous lows, suggesting that the support levels were still intact, and that actually went on to see more positive themes emerge. So by combining candlesticks together with the higher high, higher low, or previous support points either giving way or holding, can give us again very important information in terms of price activity. Okay, so where are we now with euro-dollar in terms of price action? Well, we've seen pretty much the whole of March and early April pointing to more positive themes, higher highs and higher lows. Now, this has approached the February 2nd high at 110.33, and this is still probably a very significant resistance area that we need to monitor if it's tested once more within the current price strength. So this rejection level becomes an important resistance point. And even if we're trading the market from the long side within this positive trend, this area will always be within our minds as a potential resistance point because it was a previous failure and rejection level. So will again potentially be an important area that we would need to break if we're starting to see more positive themes emerge. So we're still trading within a positive trend, higher highs and higher lows. Within today's price activity that this chart doesn't actually highlight, it looks to be resuming upside potential to retest this high. So this will be a very important focus over the next day or two, and to whether or not we can start to see further strength developing. So how about cable, sterling versus the US dollar? Now, this has seen some quite interesting activity in terms of candles. The most interesting, perhaps, is this September 26th low, where we were seeing the sterling crisis after the latest budget was reaction of seeing sterling under significant selling pressure and panic moves towards lower levels. Now, it would have been a brave man to actually buy sterling within this type of activity, but look at the lengthening lower shadow to confirm that the market had hit a support point, rejected from that level, and started to rally further. And as we started to see more positive sentiment developing within positive bullish candles, then that highlighted that sentiment perhaps was beginning to change. We started to form a positive pattern, an uptrend of higher highs and higher lows, reflecting the ongoing positive sentiment. But how about now? What's the latest price action that we've seen? Well, the most relevant piece of development is having seen this recent strength, we've broken the recent highs that were posted in December and January of this year. We've seen positive themes emerge, predominantly more positive green candles than there are red negative candles. So again, that could be a further indication of positive sentiment evident within the market and the potential to trade towards higher levels. The fact that we've closed above this old resistance level is encouraging. And also within today's activity, we've started to resume upside, maintaining this positive trend. So the overall risks are still reflecting positive sterling, negative dollar backdrops within price activity, and the sentiment still seems to be towards risks towards higher levels over the course of coming sessions, until we start to see evidence of price activity turning back to the downside and the potential of a more extended reversal. So for instance, the last correction low at 122.74, the April 3rd low, for me would be an interesting support level. And while we're above that, we're still posting higher highs and higher lows or positive sentiment within price activity. Now, finally, let's take a look at dollar yen. And again, on a daily chart, we can see that throughout sort of October, November, December, and early January this year, we consistently saw more negative themes developing as the dollar found selling pressure and the yen in particular staged a significant rally. So we were still looking at positive themes. The first sign came in early February that perhaps something was beginning to change in terms of sentiment, because within this downtrend, we're posting lower highs and lower lows, again, predominantly more negative candles and much larger candles on the sell side, reflecting that negative theme and potential for lower levels. However, in late January, early February, we started to see more consolidation, more positive candles beginning to emerge, not necessarily reversal candles, but the fact that the market started to close higher than the opening price within these sessions was perhaps an indication of risks turning towards more positive themes. We then broke back above the last recovery failure high at 131.57. So we'd seen the sell-off hold above the previous low and breaking above the previous failure high, which also saw a very significant rejection and large upper shadow. So again, the positive sentiment was beginning to change within this activity, and that we're starting to see positive themes beginning to emerge. And subsequently, within the sell-off that we've seen in March, we've also seen support developing at a higher level, reflecting more positive trending conditions and the risk for further upside beginning to develop. Now, again, as with this activity, the last recovery high at 133.75 is an important resistance focus. If, having seen the sell-off hold above this previous correction low, that starts to give way on a closing basis, then we could be looking at higher highs and higher lows forming. So again, it's the price action that's the important factor within this movement. And by gauging the size of the candles, the important resistance or support points, whether or not we're seeing higher highs and higher lows, positive sentiment or negative sentiment beginning to emerge, we can get a feel for the potential course of price action. And if we do start to break above 133.75, the next main resistance focus would be 137.91, the March rejection failure high. So by using a combination of price activity within candles, that open-close relationship, we can get a great feel for sentiment and just an idea of where directional risks are beginning to materialize within the market.